So now I'll work you through the instructions on how to get started on the first bit. So as we work through this process, I want you to get a sense of accounting, but also like you to get a bit of a sense of how spreadsheets are used, because spreadsheets are used extensively in accounting. Now, many of you may be already quite strong at that, quite strong at spreadsheets, so I won't give you anything new, but some of you that haven't used spreadsheets before, you will get some extra value from this. Starting point, I'm going to work on the instructions. It says enter the opening balances into the ledger accounts. Where do the opening balances come from? What opening balances are we talking about? We're talking about the opening balances in the trial balance. Now, I would recommend generally, it will help you get in a sense of what's happening if you print it off this page, especially to start with, the trial balance for computers at Armidale. As you look through this, you'll start to, at least at the unconscious level, get a real sense of how accounting fits together. You'll learn a lot more what an account is. We can see cash at bank, accounts receivable, allowance for bad debts. They're all examples of accounts. Then what is a chart of accounts? Well, it's the list of what all of those accounts are. Trial balance, we also see that the chart of accounts is going to be in the same order as the trial balance, and that has an order. Assets, followed by liabilities, followed by owner's equity, which you'd notice the trial balance is in the form of the accounting equation. Assets equals liabilities plus owner's equity. And they're all the permanent accounts, and then we get down to the temporary accounts, which are revenue and expenses. And as we see, they are subsets of owner's equity. Now, do you need to remember everything that I'm talking about as we go through? No. Much of this will be new. This is about giving you an idea of things we're coming to give you a base to build upon. So what I'm going to do with the opening balance, firstly we're going to enter material into the general ledger. So to give you a sense of the general ledger, accounting cycle, journal, we bring transactions to account in the general ledger by posting them. Now at the moment, we're not going to bring any transactions to account. We're just getting the opening balances into the general ledger. So what I'm going to do is take the general ledger and I'm going to move it up so that it sits behind the chart of accounts. We will then want to move it back. Now one thing you will also notice is we've got some of these tabs at the bottom are green, special journals, subsidiary ledger, general journal. So what are they? Well, they're items that form part of the accounting cycle. So I've already done the first item here for you, and if you'd printed off the chart of accounts, or actually if you printed off the trial balance, you'd see in the first one you have as cash at bank, account number 101. So you could write that in. But what I'm going to do, and this will take a bit longer, so you might just want to use your printed copy and write them straight in. Chart of accounts, we'll go past the chart of accounts to the trial balance. So cash at bank equals that cell. The account number, 101, equals that cell. And now the opening balance is June 1. What's the explanation? Opening balance. You could also have in there just OB, that would be enough, opening balance. Or bought forward, the amount which has been bought forward is often used. The opening balance, and I want you to notice something about this cell as I put the opening balance in. Opening balance is a debit of $11,340. Now you may not know what a debit is yet, but we'll come to understand better. A debit is the normal balance of an asset. So any asset account will normally be in debit balance. So that's a debit. Let's do the next item. Again, you could just write in what it is. And we've got accounts receivable, and it's going to be 102. And then it's going to have a balance of 118,000. And again, notice what happens when I put in the 118,000. And it will be a debit. And that will be June 1, opening balance, no posting reference, ref is short for reference, or in this case posting reference. It's no transactions, so there's no debit or credit happen, we're just recording the balance, account 102. Now, next one is an account with a little bit of difference, and we have allowance for bad debts, and it is account 102.1, 102.1, date equals, don't need to go back to there for date, date equals June 1, opening balance, and the amount is, now we'll notice this time it's a credit, is 13,835. One other thing we'll notice, now let's have a look at this, cash at bank account 101, then account 102, 102.1, 103. So why have we made this distinction? Well, we come to an important concept in accounting, and that's about the concept of a contra account. So a contra account gives us more information about its parent account. And here, allowance for bad debts is a contra account to accounts receivable. Accounts receivable is the total money that people owe us when we make a sale on credit, then until they've paid their accounts receivable, and we're owed $118,000. However, just because we're owed doesn't necessarily mean we're going to be paid, and we might know from experience that we're not paid everything. So we set aside an allowance for bad debts, and which is a contra account to accounts receivable, which means the normal balance of a asset is a debit, but this is a credit because it's a contra account to accounts receivable. I'll do another item here which equals, and there'll be nothing in it, trial balance, notes receivable, and its number 103. So what is a note receivable? It's much like an account receivable, except that it's much stronger. So if you want to read more about notes of receivable, a bit like an IOU, it's a bill of exchange. So you can go to the textbook and look up bill of exchange. Now typically, note receivable would come before accounts receivable in a chart of accounts. And when we talk about the structure of a chart of accounts, you'll understand why. However, the chart of accounts you've been given to work with doesn't have them in that order, so you need to work with them in the order that you've been given them in. Now, we'll notice, as we said, there's some green cells here. This is all green. There's no opening balance. That means the cell is already correct. Let's go to one, maybe two more items. Inventory, trial balance, offer supplies. And I'm going to warn you, I'm doing something wrong at the moment. I've taken a shortcut, which I'm about to pay for. 130. And date, June 1. Opening balance. Now, here's a bit of a clue to me, because I can see already there's an item mentioned here that my first entry here should be a credit. There's a clue, but I'm going to go in here, and opening balance for offer supplies is 8,000. Now that hasn't gone green, so that's a warning to me that I've made a mistake in terms of this assignment. Why? What shortcut did I take? Well, I went to the trial balance, which only has the accounts which have a balance in them typically, but there's also some accounts that appear in the general ledger that won't have balances, and that's really what's happened here. When I go offer supplies, what I should have done was gone to the chart of accounts, and I see there's an account here, discount received. It is 120.1. And what does that mean, 120.1? It's a contra account to inventory. Inventory, as we said, sometimes also known as merchandise inventory, or stock on hand, doing a stock take. So that item was wrong. Discount received had no opening balance. So we'll need to wait till we put an item in. Then I need to go to chart of accounts. Then office supplies on hand will come up. It will be item 130. I think before I enter a few more in, I'll also do the account names, Prepaid Insurance. And that's going to be account 140. And that's finished all the current assets. Then I move on to non-current assets. And in the non-current assets, the first one I will have will be equipment, item 160. Again, it would be, in this circumstance, quicker just to write these items in. And then we move to another contra account, accumulated depreciation. Accumulated depreciation, which we can see as a contra account to equipment. So it gives us some sense of how much of the value of the equipment we have used up. Now, a few more items I'll go. Then we go chart of accounts, accounts payable, so that's the money we owe to people, and that's account 202. 202. So that's got our account names in. Alright, accounts payable, notes payable, there's 203, here's a wrong item in here, notes payable equals 203. Right, now I'm hoping by now you've got the hang of this exercise. You've found out the pitfalls you're likely to come to. What I'd like you to do though, I've just left a few others blank for you further on, that you go and you put those items in yourself. Mostly they're there, but there's a few others you need to put in. I'd like to highlight just a few other things back here with not office supplies, where we should put that opening balance in. So June 1, opening, let's just go OB. Save a bit of time, balance, office supplies, balance 8,000. And we'll put in prepaid insurance, June 1, OB, and the opening balance is 11,000. And again, it will be a debit because the normal balance of an asset is a debit. Office supplies, the normal balance of an asset is a debit. Now let's go back to the trial balance. There's a few notes here because you might be saying to yourself, what is prepaid insurance? So let's have a look. We can click on this. We can go edit the comment, and we can make that comment a bit bigger. So when that comes up, we can see, and you can take prepaid insurance. This is the insurance you have paid in advance. It is an asset. It will become an expense as the period progresses, and that's as you use it up. You will bring it to account as an expense by debit insurance expense, credit prepaid insurance. This will happen when you do your end of period adjustments. So some of these, you'll just see some notes that will help you understand what these items are. I will finish that there, and the next video I will put on will have components of putting in the opening balances for the subsidiary ledgers.